Hello, I'm Donald Leggett, and welcome to the latest Focus IR interview. I'm joined by Gordon Stein, Chief Financial Officer at CleanTech Lithium, the AIM-listed lithium explorer and developer focused on direct lithium extraction projects in the Chilean Andes. Gordon joins me now to discuss the latest news from CleanTech Lithium. Welcome, Gordon. So how are you today? It's been a while since we spoke.
It is, yeah, and I'm fine, thanks. Yeah, it's been an interesting time. Yeah, how are you doing?
I'm good. I'm very well, thank you. It's lovely to have you on today. So let me start by asking you about the Laguna Verde project and the latest news from there. You've agreed a sales and purchase agreement, which gives CTL full ownership over those 23 licenses which you'd previously controlled through options. So what's the background to all this? Tell us more.
It's probably worth just to mention that we've got CleanTech, Laguna Verde, we have 108 licenses, 85 of which are wholly owned by CleanTech and have been for some time. And another 23 licenses have been held on an option agreement. We fully disclosed that to the market before. And what is an option agreement? It's basically an agreement, and it's an agreement you see standard around the world where, parties, particularly in the early stages of their development, will take an option over licenses that are held by other parties, and that option will give them the rights, exclusive rights, to work on those licenses and use those licenses, in fact, control the licenses over a period of time, and 3, 4, 5 years can be the case, and then paying a certain sum of money during that period, and then eventually at some point deciding, like in all options, to either exercise the option or not. So we've had this in place since April 2021. It was put in place by the two co-founders. And it's going through its stages. So, we've met all the payments and so on. But it's now a point we felt it was time to change the structure of that. So what we're effectively doing is changing the ownership of an agreement and taking 100% ownership now, as opposed to waiting another 2 years to exercise that option. And there was various drivers to that we thought this was a good thing for our shareholders.
Okay, Gordon, so it's probably worth explaining to investors what the commercial objectives were from CleanTech's perspective, and whether you think you feel at the end of the day you've actually achieved those commercial objectives.
I was thinking about this before, and actually there were four key objectives that the board had in restructuring this deal. And I'm just going to go through the 4 points quickly and then go through them one by one. The first one was clarity. I think you remember that, because we wanted greater clarity on what the payments were going to be down the line. Second one was we wanted the large part of this whole new structure to be funded fundamentally from revenues, from future profits arising from the field. We didn't want the use of CleanTech shares. I'll come back to that. And finally, we wanted a pathway towards the ASX listing, because this had become a constraint. So looking at the first point, clarity. The nature of the original option agreement meant that there was going to be a calculation carried out at the point of the option being exercised to calculate the value of the shares, so the value, of the extractable reserves on those licenses as part of the whole project. So you can imagine you bring in an independent expert. That person has to work out what part of the reserves, the valued reserves, relate to those 23 licenses versus the other 85 licenses. What part of production, what NPV to use, what discount rate to use. I mean, the whole thing was pretty subjective and potentially open to debate between the parties, and then potentially legal debate. So really, we wanted to get clarity, and clarity we've actually achieved that by getting very clear milestones, clear payments, and in particular, the latter part of the payments, the more larger parts, are going to be met from either construction finance. The construction finance, this is about 1% of the construction finance will be for that one payment, and the last two payments funded from revenues, and fairly substantial revenues. So from an investor perspective, from a company perspective, and also from a shareholder perspective, and also strategic partners who come in, we've got absolute clarity now on what we're going to be paying, when, and how, and there's no debate now, no subjectivity. The second point, funded from revenues, I said, that was a really key point. We won't be raising money to fund those last two payments. They'll be paid from cash flows. You're looking at potential cash flows of 200 million on the first 10,000 tons after we've produced them, and 700 million revenues on the 35,000 tons. So that's, between 1% and 2% of that. So we're in that right ballpark where fundamentally we'll be paying it from future revenues. So that worked. And then CleanTech shares, the original agreement had 80% of that calculation and that payment being made in CleanTech shares, 20% in cash. And you can imagine as you get close to April 2026 with shares potentially going to be offered, how many shares, what's the dilution going to be, what's the impact on the whole shareholder base. So we wanted that just to go, and that's what has. So now we've got a very clear line with just pure cash payments. So from a shareholder perspective, we've taken that risk out completely. And then finally, ASX had made it clear that this is a constraint. They don't really get option agreements in Australia for various reasons, and particularly because this is what they define as a flagship asset, Laguna Verde. They wanted us to have at least 51% ownership of all licenses associated with that asset for all manner of their own reasons. So necessarily, this gave us a catalyst to allow us to renegotiate with the vendors, on the basis that we needed to unblock this issue from an ASX perspective. So all of those 4 objectives we've achieved, and so on. ASX has already given us previously the approval to the structure that we put to them earlier this year, which allowed us to negotiate the deal with the vendors. So we're very happy at the outcome. Certainly the board is, in that we've ticked the boxes on all of those 4 key objectives. So yes, I think it's been a very positive result for the company and for our shareholders in the medium and longer term. Takes a problem away, or an issue away.
Would you describe this as transferring value to investors, perhaps? Is that a good way of summarising it?
I think it is a good way of doing it. Yeah, I mean, because of what could have been the outcome in the calculations, with the vendors, we've now got shareholders understand, very clear line of what the company will pay. So from a shareholder perspective, yes, I think the value moved from the vendors to the shareholders. So this is a good result for the shareholders, I believe.
So presumably at some point it was always going to be necessary to turn these options into full ownership. So why now? Why is this the Goldilocks option? Not too warm, not too cold. Why now is the perfect time? And are you happy with the outcome?
Well, as I said, the driver to a certain extent was ASX and the requirement to clear that path. This was a potential constraint. So we've cleared that constraint now. So we're open now on that ASX front. But the board would have done this anyway. It made sense to do it. You could imagine there'd be a potential problem down the line with different valuations and who thought it was bigger or lower. So we've taken the opportunity to do it now, and we think this is really good now because we're going to be entering into strategic conversations later on this year. We know exactly what to tell parties is what we're going to be paying, whereas any party previously would do their own maths and come up with lots of different numbers. So I think we've got that now. So yeah, the board is pleased. It's achieved a good outcome. The vendors were very flexible in the way we approached this, and it's been a very good process. And as a result of that, we've got that clarity we need to move forward.
Would you say this is an important milestone that's been reached for CleanTech?
Absolutely. In the sense of we're now, we're also signalling that we're very confident about the asset we've got. The licenses. We've paid $1.25 million for this first stage payment, and clearly there's a number of stage payments that follow that. But we've got a situation now where we're moving forward, reasonably fast with Laguna Verde on a number of fronts, and we're evidencing that now by putting some more hard cash down on the table.
Now, which takes us very neatly to the fact that over 10 years of the project, these different stage payments that you're talking about, the amount payable when you gather them all together comes to $35 million, which does seem a pretty hefty number. So why do you think that $35 million is still actually a good deal from CleanTech's perspective?
I guess you have to put it into context in the project where we are. These are not exploration licenses. These are licenses that are, there has been resource discovered. There'll be reserves on these licenses within the next few months. And, we put out a scoping study with a valuation of $1.8 billion. Now you can run numbers up and down from that, depending on your inputs and your lithium price. But this is a pretty serious project. So, and actually to give an example of two examples of other companies who've bought licenses in Chile within the last few months. You've got Codelco there, has just spent $245 million buying lithium power. Bought it for the Maricunga licenses. That's a chunky sum of money. And why did it do that? Because it wanted to get rid of a neighbour and have more control and more ability to do things without having to knock on doors. And then you've got Eramet, French conglomerate, who's actively will be bringing their first DLE plant on stream within the next 2 or 3 months in Argentina. Spent $95 million buying 5 licenses, exploration licenses in Chile in the latter part of last year, to move projects forward there. $95 million. They paid it up front. We've got a $35 million deal where we're paying anything up to 10 years, and with the latter part being made from production, paid from production. So, we think this in the context of what we've got in the scheme, we think this is a reasonable deal. It's good for shareholders because it provides a clarity, takes away the share issue, as I mentioned. And we think from the longer term perspective, this adds real value to our shareholders and to the company potential.
Okay, and it's worth noting that the first payment will be made with the new £1 million convertible loan note. So why don't you tell us a little bit about that? It's a small part of a much bigger thing, but it's an interesting element to the whole thing as well, isn't it?
CFOs always, like to take good money, and we were approached about this. Someone was aware of the transaction that was going on, and offered to pay the first payment. I mean, we've managed to secure that on extremely good terms. If you look at the nature of that convertible loan note, you've got a conversion rate there with VWAP plus 50% premium, or the lower of that, or 30p a share. That's twice what we're trading at around about now. So there's good conversion terms, and also 3-year facility unsecured with an interest rate of the London rate plus 3%. So really good market terms, and also by taking the loan, it left all of our firepower to get on with our work program. So our current funding allow us to do that, not dip in, spend £1 million of our current resources.
I suppose that's the main thing, isn't it? You really don't want to be diluting your own cash holdings. You want to be spending that on pushing the project forward as fast as possible.
Exactly, yeah, and it was one of those things where it seemed the board was comfortable and it made sense. We think from a deal perspective, this is a good convertible loan note, and we're really grateful to the individual involved. Who's a businessman who understands the nature of all this.
Okay, and as you mentioned, it clears the way for the ASX dual listing. So why? Let's go back to fundamentals. Why is the ASX listing a good idea? And what sort of ASX listing time frame, what sort of timetable might you be looking at going forwards?
Just a reminder, but 30% of our shareholders are Australian, and there's been a push, for us to go into that exchange. I mean, why? The ASX exchange is fundamentally, mining companies. It's extensive number of mining companies there. There's an investor base that understands mining and extraction. It also has a very strong retail base, and they rate companies and they value companies in a different way. I mean, I'm not going to name names, but I look at some companies who've got a third of our resource and nowhere near as advanced as us, and they're 3 times our market cap. Well, there's a story there. Clearly, in us going to ASX, we have to sell that story, but it gives us option to increase our market cap and our shareholders. So and also access to capital. There's a good pool of capital in Australia with savvy investors who understand, medium to long term mining and extraction projects. So I think we were being pushed and nudged to go there. We're going with open arms, and this deal that we've just done now, this restructure, will help us now. We'll get there. We've got the paperwork largely in place. So it's been quite a regulated process to get on ASX, but we're in pretty good shape now. We've done this deal. We did put this deal to the ASX committees when it was in term sheet form, and it ticked the box. We got clearance to go ahead. If you deliver on this, we'll open the door. So the board's now just looking at the timing of that. We've got the option. We could move pretty fast in the next few weeks, and then it's a question. So really, the board will look at it in the context of the market and what we think makes sense for shareholders. So we're now ready. We're in a position now we can go when we choose.
No, well, that's interesting to hear. Okay, thank you for that, Gordon. Now, if I could ask you a couple of operational questions while I've got you in front of me. You're already working on the PFS, you said, for the pre-feasibility study for Laguna Verde. When can we expect that to be published? Is that later this year?
Yep, we're on track. We'd said Q3, and we're still on track for that. I mean, what's interesting about the PFS is this is not a scoping study. This is a detailed piece of work involving numerous consultants who we hire to do particular pieces of work. A study on marketing, what sort of products should you have, and because this market is changing all the time. Logistics, where should we put the plant? Should we keep them both up the mountain, or should we do one in Copicorn up the mountain? What about ports? We've got 3 to choose from. Which one? Not necessarily the nearest one. And then you've got other studies on water, on power, so all of these are pieces of the jigsaw pieces that are coming together. And actually, what we'll probably do in the next few weeks is start to put out some of the information from that, because we're starting to see a picture developing of how the project will move forward. So we won't wait until whenever it's in September time when we submit the PFS to say this is how we're going to do it. We'll start feeding information into market as we as a board are starting to decide on the options we've got. So it's quite interesting seeing these reports coming together. We've had a couple, and we've sent them back for additional work and comment. But I think what you will see is information feeding out to market, and it'll be a substantial piece of work that we can put in front of any strategic investor around the world that'll get the nature. And Worley are a well-renowned international firm driving this process. You've got Montgomery there, really, really, really strong in North America and South America, working side by side on all of the fundamentals. And it is fascinating, Donald, because we've seen the picture develop, and there's some really interesting developments coming out, and some surprises, as you start to look at options, and wouldn't it be better if you did this rather than that? So it's coming together nicely.
And which takes us to news flow. Yeah, I'm thinking I'm hearing a lot of news flow coming from me in the next few months. Would that be correct?
Yes, I think so. That is correct. We've got the pilot plan up and running, and that's doing nicely at the moment. And Steve will update the market next week. He's got a webinar, I think, next Wednesday. By the way, Steve's been in Chile for the last week, seeing the team, meeting regional governors. He's been to see the pilot plant. So he'll provide a really good update next week. I don't want to step on Steve's toes, but
Steve was chairman, and he's now CEO. He's full-time CEO at the moment, isn't he?
He's pretty hands-on, and that's great. Steve knows Chile pretty well, and you talk about the PFS. He's met with the key players in the PFS, in terms of progress and reporting and some of the interim reports and so forth. So I think operationally we'll obviously feed information out on the pilot plant and evaluate being sent to America and that sort of thing. We've got a drilling campaign on the go at Laguna Verde, and we'll be moving into the re-injection test soon. We've got pump tests that we've got going on. And obviously, as we continue to move our projects forward, there'll be a sale announcement by the government in July, and we feel very positive about where that will go. And so lots of operational news that we'll see coming that will start to pull the jigsaw pieces together. So it's a pretty busy period on the ground at the moment. So Steve will have seen that.
We've not talked since the pilot plant actually came on stream. So could you just update me, if nothing else, just out of sheer curiosity? How's that gone? How's that process been? Have all the bugs been taken out of the system? Is it all up and running as you'd hope?
Well, I'll probably let Steve answer the bulk of this, because he's seen it and touched it. But Steve was pleased by what he saw, so I probably shouldn't say any more than that. I mean, it is functioning now. This is a big pilot plant. There are other companies out there who talk about their pilot plants. This is substantially larger than a lot of our peers have got in terms of scale. And this is up to 1 ton a month, and we'll prove that we can potentially deliver that from the capacity. So we're starting to see some really interesting results come out. I mean, in the last couple of days, I've seen various reports. So as the information is starting to pull through, so I'll leave that one to Steve and let him embellish that answer, having kicked the tires. There was some photographs taken. I'm sure you'll see them as well.
My final question. Why should investors have CleanTech Lithium on their watch list? My standard final question to all senior management.
Oh, well, everybody says they're undervalued, don't they? But
some of them actually are, though, Gordon.
Well, we look at our peers and we scratch our heads at times. Where are we? We've got a project driving forward with a drilling campaign. Nobody else is drilling anywhere near what we're doing in Chile. we're in a good place on our sales because we've submitted our sales. We'll resubmit. The government said resubmit them again, please, and we'll find out where we are in that process. And we're pretty confident about how that process is going to move forward. We've got we've talked about the drilling campaigns and the reserves. We're going to be announcing reserves within the next 2 or 3 months. We're heading towards a PFS, which is a pretty substantial piece of work, and that opens the door to strategic conversations. I mean, just another aside. We are approached by strategics on a pretty regular basis. I mean, we've got 500 in here. We've told the market that before, but we continually get approached, and the more people that are watching, the more it becomes interesting. And they're making some indicative proposals, which you look at and you think, okay, not yet. So, when you put all of this together with the PFS and where we are, and with a strategic conversation at the end of the year, and with the ASX listing, which we plan, we hope obviously from ASX we get a bit of a re-rating, and we think there's a lot of news flow that's going to be catalyst for value events for the company. So I think we're in a good position as we move forward step by step. And I compare ourselves to some of our peers, and we're way ahead of some of them. So I think in a market where lithium is still in significant demand, and we know for a fact so it's either 20 or 30%, whichever analyst you look at in terms of annual growth of lithium demand in the world, we're in a good place with some good projects and with good assets and a good resource base. So I think you'll find people will be interested in what we've got.
Gordon Stein, CFO of CleanTech Lithium, thank you so much for joining us today. Thank you for putting the latest news from Chile in context for us. For more company information and data about CleanTech Lithium, please go to the CTL pages or London Southeast. And meanwhile, do follow us on Twitter. That's at London Southeast and @_FocusIR_ or register on London Southeast YouTube to receive alerts to our next CleanTech Lithium interview. All that remains for me to do now is to say thank you very much indeed for watching.